Okay, hi guys. Hope you're all well. Hope you're having a good week. I think we're down to talk about sort of dollar Swiss, Aussie dollar, and dollar CAD. But what we normally have a tendency to do is just to try and get through as many of the currency pairs as possible, just so it gives you a good idea of where things are going into next week. What I used to do was I used to write reports called time frame breakdowns. Okay, I think there's a lot of emphasis with regards to higher time frames and trading. You'll obviously have all heard the saying, "The trend is your friend," and the trend is your friend until the trend is over. And obviously that's the difficult part. I'm a long-term analysis. By that I mean I'm always looking for long trends. I'm always looking for long trends, and I'm using short time frames to break into those trends or to take my view. Now, I've recently been asked to write a book on FX trading, and the guy or the company, the publishers that have asked me to do it, have asked for some sample writing. And they turned around and I said, well, what do you want to say on? And they turned around and said, well, what you give the most emphasis to. So I sat there and I thought, what do I give the most emphasis to in my training? The thing that I give most emphasis to is the time frames, okay, the time frame breakdowns, breaking things down from a big picture into a smaller picture, until you get your trigger. And the way that I've explained it in this bit of writing that I've done is basically you regard the weekly chart as being the daddy, okay? So that is the one that we take our main emphasis from. Obviously the weekly candle, you don't have to look at it through the week, or you shouldn't look at it through the week, because the weekly candle is not fully formed obviously until Friday night. Okay, so what I have a tendency to do, I spend about an hour and a half at weekends, either on Saturday or a Sunday, it doesn't matter, going through all my weekly candles, my trend lines, my fib levels, what chart formations I can see on this weekly candle. Like I said, I call that one the daddy. The daily candle, I call the mother, but she's supposed to take orders off the daddy, so whether or not that's the wrong way around, I don't really know. I can live to dream. Then you've got the 4 hourly and the hourly candles, okay, and I call those the kids. And basically the kids should take direction from the parents, okay. So the father gives direction to the mother, and the mother tells the kids basically what to do. If they don't take notice of basically what their parents are saying, or the higher authorities, then there's a good chance that they're going to fail, or they're going to be, at the worst case scenario, they're going to be trading against the trend, okay. And trading against the trend, as you've probably all heard as well, is like swimming against the tide. It's like trying to push a boulder up a hill, etc., etc., etc. So this is what I'm going to show you today. Obviously through the different webinars that we have done, that are all, I think most of them are recorded on FX Street. You'll notice me talk about different things, RSI trading, trading with different moving averages, etc., etc. Today we're going to talk about time frame breakdown, and we're going to talk about them on as many pairs as we can get through in 55 minutes. I've got Euro Sterling on here, and the reason I've got Euro Sterling is just it's the first currency pair that I'm looking at, okay. I write reports. I've actually started doing signal reports, or what my biases are in the morning, and we're just talking at the moment with the powers that be, whether or not we can publish those figures or those charts. They actually go out at 7 o'clock first thing in the morning. I get up and start doing the report about 5:15. But as ever, because of regulations, NFA, FSA, etc., etc., we've got to make sure that they're not trading advice, that they're seen as educational. So we'll wait and see what the outcome of that is. Okay, so on to the Euro Sterling. Let's get the weekly chart on. I seem to have lost a trend line there. Let's just put that back in. Okay, this was the first signal. Okay, this whole move up is impulsive. Okay, all chart formations have the same relevance in different time frames. Okay, obviously the higher you go up in time frames, the more relevant those trend lines are, those chart formations, the fib levels, etc., etc., etc. When you're getting down, if any of you are crazy enough to trade off sort of 5 minutes or 1 minute charts, then the fib levels and all the rest of it have a tendency to go out the window, because their fib levels inside bigger moves, and they can push out to 423.6%, or basically wherever they want to time. So we've got this big, could be seen as an ABC, but either way, even if this is regarded as a flagpole, or the whole move is regarded as a flagpole, what we can see is we can see this choppy pennant formation or flag formation, okay, that gives a bias to break to the upside. So I've taken this as the low point, okay. This level here was 50%, okay, where we formed a doji. Now I'm not really giving too much emphasis to, I don't only use my moving averages, by the way, as support and resistance. I don't use crossovers, so you can see on quite a few occasions to the moving averages too much on the weekly chart, because I'm using the same moving averages down onto the daily chart, and the daily chart is has a tendency to give me my signals. But what I'm looking for in the weekly chart, I'm looking for price rejection, I'm looking for fib levels, I'm looking for trend lines. Okay, here we get this spike lower, price rejection, closes with a small green body. Now that candle there is a very decent candle through 50%. Why it's also a pretty good signal is because it closes against a bearish red, but it closes with a green body. Okay, if it closed with a red body, in other words it was slightly bearish closing, then it would not be as good a signal. Okay, you need to take notes of candles. Candles are price action. Candles are the here and now. Okay, price action is more important than, well, I said time frames more, if you know. In this here, this is price action. Okay, that is a engulfing red candle off the high. Okay, and the market just keeps on getting, never breaks. That's you've got, okay, the engulfing. The whole of the other key engulfing candles have more power behind them than just body engulfing candles. Again here, full engulfing candle, never gets taken out to the high. So these candle formations are price action. Okay, again here, that's called a double high low close. Okay, so you virtually get the same top, and it breaks the bottom, and then it moves to the downside. You need to be aware of these candle formations. Okay, here again, engulfing green. Okay, so we get this doji down, holds the 15 EMA, and then pushes to the upside. When I get a higher low, especially with a doji, the previous low, this is signaling to me that I want to be starting to look for long positions. Okay, and then I'm breaking it down, obviously into shorter time frames. My weekly and my daily charts have a lot more to them. Okay, because the daily charts are really giving me my bias and my signal. I'm looking at my weekly. Is it engulfing? Has it finished bullish? Has it finished with any sort of spike in one direction or the other? I can normally get a fair bit of that information off my daily, because obviously I'm looking at my daily every day. Okay, and this is where all my fib levels, etc., come into play. So I've got my bullish move up, I've got my move back down. As she closes above my EMA with a decent bullish candle, from that point onwards, after a higher low, I'm then looking for bullish signals. Broke out of this trend line here. Okay, this was the this was the confirmation. Okay, above the high, and I've been riding this trend all the way up. Been riding it all the way to 88.20. Okay, I did actually get out around here, because I thought she would stop short with this spike in doji, and we also had a decent down day there. This engulfing green, if you just believe in just purely trading off on price action, would have tempted you to take it higher. But this is this is the best fib or Elliott wave sequence probably on the board at the moment. And this is 1, 2. This is obviously 3 up to 88.20, and the inside waves are pretty solid as well. What I'm expecting now is a move down in this pair. Hold on 1 second. Okay, I'm expecting a move down. It's going to be choppy before the next leg higher. Levels that I'm looking for to the downside. Okay, 87.03, and possibly down to this level, 86.45, 86.50. Elliott wave dictates, okay, that the wave 4 sequence, the choppy wave 4 sequence, should retrace between 23.6 and 38.2. It's been a very impulsive move up in the third, which also makes it look very good for Elliott wave. So she might only retrace to around this level. This EMA, okay, is my target, because I know that she holds a support off this EMA as she bounces off on the way to the upside. So that EMA is my first target. Okay. Any questions? Oh, obviously, once this correction's out of the way, so obviously 4 down here, hopefully. If I'm trading retracements, or what I consider to be retracements, I'm only trading them in small, okay, because my bias is continuously is still to the up, okay. So I'm expecting a choppy move down, probably towards the end of the month, to be perfectly honest, for the next leg up. And the next leg up, obviously this is the target level, which is probably going to come in around 89, the figure. Okay, there's some previous price action around that level as well, if you notice here. Okay, again here is price action here. So you've got numerous points where 88.50, sorry, is held as price action here, 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 here. Okay, here again. I then expect some resistance around this level, a break of that level, and we're going to take out this high at 91.20 and possibly up towards 93, the figure. Now you're looking for a rally in euro and a depreciation in sterling, Gino. And I think what's going to happen, we are going to get QE2 in the UK. The UK, I think sterling is going to devalue, and we're going to see this move up. Probably not until the end of the month. At the moment, we're going to be looking at maybe sterling weakness and a little bit of cable strength or sterling strength, okay, to push us down. And then I think we're going to get a bit of QE in the UK, and it's going to push the next 2 weeks. It's going to be choppy. Wave 4 is so hard to trade as an analyst or a trader that a lot of the time you're better off standing downside. Any questions about sterling? Hold on 1 second. Got all the currency pairs as well. There's some winners and some losers. I think yesterday was about 130, and then this morning's up about 90. But per trade, it's going to look at 11 different currency pairs. I never actually look at my average pip per trade, but I just look at my overall daily profit. Okay, let's change. I'm not, believe it or not, I know you'd look at that that analysis that I've just done on euro sterling and think that I'm an Elliott wave trader. I'm not really. I'm more prone to fibs. But if I get a decent Elliott wave setup, then I obviously look at it as that bias, because obviously I do know that sometimes Elliott wave works well. But the trouble is with Elliott wave, a lot of the time what we see, or what one guy sees as a 5 wave or possible 5 wave move, somebody else sees as a 3 wave correction, and it's really not until the top of that 4th wave or 3rd wave is taken out that you can confirm that you're in 5th. So I'm not mad about it. There is a website called Elliott Wave International, or just take up some really easy reading on Elliott Wave. I wouldn't, like I said, I wouldn't get engrossed in it. There's a very good book called Forex Conquered, okay, and that tells you, or that explains to you, a lot of the basis behind Elliott Wave, fib levels, bit of money management, commodity pairs, etc., etc. Okay, so the trigger this morning, just to tell you a bit about these triggers, these daily triggers. I've got an upward bias this morning, got a decent bounce off daily support levels. I was conscious about 160, so the trigger level was at 160, the figure. Okay, the first target was at 160.20, and the second target was at 160.55, with a possible extension up to 161, the figure. So out 2 lots, third lot into entry, in stop loss into entry. And that's basically the way that I work in the morning. All my triggers get executed at 7 o'clock open, or it's either I either buy at the open, sell at the open, or I look to trade a break if it's in between what I'm looking at. So here, weekly, okay, this is obviously 61.8% of this move down. Okay, so this is the move down 1, 2, 3, 4, 5, going back to Elliott wave again. Okay, what we do know about Elliott wave is that the wave back should be in 3 waves. Now she has taken out top of these 2 candles here. Okay, so as far as Elliott wave is concerned, or as far as Elliott wave analysts are concerned, as long as she has breached the top of there, then this wave C could be completed. Okay, what we do have, okay, we have rejections off the low of last week's candle, and we have a decent move up. If she closes above this level that she's bang on at the moment, basically 160 the figure, she's trading at 17, okay, then this is the next price action. Okay, we've got a spike in rejection candle there that's showing resistance. It also happens to be 78.6%, okay, 164.53. So a possibility still of a decent move up in cable. Notice how she held here perfectly well, just a few spikes under, and then obviously a rally up. Daily chart, messy, messy, messy. Okay. This was 1, 2, 3, 4, ABC, 5 was short, okay, then got 5 waves up to form A. It's another thing that you should be aware of. Obviously on the longer time frames as well, if you're looking at your weeklies, A is in 5 waves, B should be in 3 waves, and C should be in 5 waves. I have got 5 waves in here. I just don't know if they're the right 5 waves, basically. Today's close is going to be essential. This is my support level, 158.60. Okay. I do not count spiking candles. So when she went down and rejected here, if that had been a solid close underneath, then I would have been looking started to look for short positions in sterling dollar. But she didn't, okay? She spiked and she rejected again on the next day, the close level, okay? And she pushed up and then moved above. So when she moves up, you've got a body engulfing candle, but it's a body engulfing green. Okay, that is a bullish signal. And we know that 160 is attracting price action, okay, because we've been here and rejected on the first. on the first hit. So like I said, if she closes above here today, if she closes above 160, going up to 164.53, which to be honest with you would be a better wave C than just taking out the high here. Okay, and again, price action getting down into one. So do you see? Does everybody understand how I'm getting my bias off my weeklies? So I've got my weekly. I'm getting my bias to the upside. Okay, decent candles up. Okay, that one threw a bit of spanner in the work. A doji candle is in uncertainty. A price, you know what it's looking. Spiking dojis with uncertainty, price rejections. Here we've got the golf in red as well, which takes it down. Okay, this is just a body engulfing, but obviously closes above the high, keeps the bias to the upside, holds this support level, moves up. These are the levels that I'm looking at for support and resistance. And then I break it down into my daily chart. These are levels that I'm looking at for support. Okay. So close above 160 the figure, and we're going to look at rallying up again, I think. 1 hour, getting some decent rejection here. This is my support level. Okay, 159.81 at the moment. That's not much. If you put your fibs back on as well here, which we had on this morning, like I said, the trigger to buy was off 160, but we put the fibs on. Okay, rejection or a retracement to around 50, well, between 50 and 61.8. Nearest damn it better. So that's screaming 1, 2. You then get this here, this is the mid, and then she refused to push here. When she stays in this zone, okay, this candle range, you want to be careful because you can. It's shown that there's been a rejection there already. So really, you want to be trading the break of the high with the trend to then target the next high, okay, 160.19, and then obviously 160.55. So I mean, I'm out now today. I've had 3 lots on. I've got stop loss to entry at 160. It's not going to hold for very long, and I've taken 2 parts out. And that's another thing about trading. It's not just about buying one unit. It's going to go to the take it off. If you're just in trading one unit, if you're not trading multiple units, it's much harder to manage your account because you can't take parts of your trade off, move stop to entry, and then try and build and what they call bleed a trade. Bleeding a trade is as if you bought it here and bled it all the way up to there. And also, I'm virtually out of the game by 1 o'clock. Most of my trading is done by then. I do keep an eye on the market, but because I start so early in the morning, I really only want to trade the European session. And like yesterday, I just want to play golf. So if you can take enough out of the market for the hours that you're going to put in, you know, you don't necessarily need to be working the afternoon session. And also, yesterday's or a lot of the afternoon sessions, I do feel sorry for guys that obviously trade out the States and all the rest of it. Afternoon sessions can be far more erratic, especially with big figure releases than the European sessions. So any questions about cable? Obviously, a close above 160. I think we could ride up to 164. I need to see a move or a close under this sort of level, 158.20 to 12, to confirm that I'm moving to the downside. If I've got an upward bias and the market's moving lower, I'm just not trading. If I'm not trading, I'm not necessarily losing money, but I'm just letting the adjustments or the retracements pan out, and then I'm looking to get in when it confirms that I'm looking to, that the market's going back up. So here, if I'm still in this trade, But if I'm new to this trade, I'm looking for support around this level. I'm looking for support around this level. I'm looking for support around this level. Okay. But that candle to me at the moment, unless it retraces all the way up and forms a complete pin bar, it's not confirmation enough for me to get long. Because it's not breaking a high. It's not a bullish formation. It's you know, okay, it's rejecting 160.19 at the moment, but it doesn't mean it's going to close there. One thing you've got to be aware of is you should never count the candle until the candle's closed. If you've got break levels, that's all well and good. But if you turn around and say, right, if, especially off my supports, I wait for a candle to close below my supports or above my supports, not necessarily for my break levels. And this is obviously 160 was a break level this morning. Any questions about cable? I'd watch that 161.07 if she does push up. Like I said, 161 was a full-time figure. I'll show you this. Okay, I hope you guys can see that. That's a more complicated version of what I'm showing you today. These indicators that I've put down the bottom, saying that I developed myself, is very easy. Just a bullish and bearish engulfing candle, which obviously has a lot of relevance to my cloud. I've got an EMA channel in here. Too messy. It looks far. I've got an RSI. RSI, as I've said before, the 50 line bearish. This is called a direction indicator. Again, red bearish, green bullish, and a MACD, no divergence. But and there's obviously pivot points on here. But I'm not mad about them. And this can overcomplicate things. And obviously, the more you put on your chart, the more reasons you have not to trade most of the time. You know, if you turn around and go, well, that's got to line up. I've got to need 5 things to line up on that chart. But most of the time you won't get in, or by the time you do get in, you're going to get in so late that you'll have missed it all anyway. Let's get rid of him. Drop that off. Okay. Is Aussie dollar going to get to parity? Let's do Aussie dollar. Let's do euro dollar next. Weekly. Okay. 1, 2, 3, 4, 5. 1, 2, 3 to around 61.8%. Okay. This formation here, a perfect ABC, will take you to 140.44 through. Again, it's looking bullish. She rejected off this week's opening and has pushed to the upside. Okay. Price action again around this level. The 144.50 is could potentially attract the pair. We've also got 78.6% there. Okay, this is obviously the move down. This is the price action around that level. She's broken out of here. Okay, this was previous price action. Bang, bang. Stopped, paused around that level. Engulfing green candle. This is a break line. Okay, it was resistance, as we know. Becomes resistance here. She then breaks through with a bullish candle, bullish engulfing green. Okay, at all this point, you should be looking for buy signals. At no point in this considering shorting this pair because it's showing you this. Okay. Bullish green through the resistance. What happens? She comes back to test the resistance line. This happens a lot on because obviously that resistance is now support. Okay, it happens a lot in wedge formation breakouts. It happens in channel breakouts. We've got one on sterling yen actually at the moment that we'll have a quick flick through to see in a shorter time frame to see if it's holding. So here, doji off support, and yet again you're moving to the upside. Took a buy on the open on this morning, but only up to 141. Okay, the open being the 7 o'clock candle. It's got in at 78. It's only looking for small pips up to 141. And I'm now completely out of that one because it also came back and took my stop to entry. Potentially, it's not bearish, that's for sure yet. I mean, 141.43, possibly 143.69, and then you've got this level, okay, which is the level that we've talked about on the weekly chart, 144.66. So a fib extension up to take out that level. There's no indication that this pair is moving lower yet. This move down looks corrective. Again, bang onto the support level. And then when I'm getting down to short time frames, when I'm getting down to our hourly charts, okay, I've got this as my support level. I've got my moving average. I've got my breakout line. Okay, and then going down onto hourly charts. This is just price action. And then I'm looking for a higher low because we know that if we're in an uptrend, we're going to get a higher low. So it rejects my resistance line, my moving resistance line. It moves lower. It then breaks up. From that point onwards, you want to be looking for signals to go long. No, I don't look at the COT report. I just trend, basically. I'm not trying to pick the top. I'm not trying to pick the bottom. I just want to be in the middle. Most traders, institutional traders, start trading at 7 o'clock in the morning, and that's why I look to take the trade at 7 o'clock if it's there. Again, look, we're just rejecting here, and put lines on your chart, okay, previous high points, because when you do, this is the level that should act as support. I've got support here, I've got support here. So you know if it breaks through these two levels, then you want to be out, you want to be standing aside. I only want to be looking for shorts if I'm underneath here, okay, 137.82. So at the moment the bias is still to the upside. And if we get a weekly close up around here, it's looking pretty good, isn't it? Okay, change security. Usually, and that's why I don't work till really late, because obviously I'm be exhausted. Okay, 10,000. Yay, we've hit it. When was that? That's obviously in this hour, is it? Oh no, we haven't. 95. We're good. Okay, weekly analysis off here. 1, 2, 3, 4, 5. A, B, C. Pull back to support, and then she's off again. Is this going to be a 5-wave sequence to start forming another wave to the upside? Maybe. But just notice that this wave here takes out the top of this wave here. So what I am looking at, I'm looking at fib levels, okay? And 261.8% is 101.57. Breaking it down. At no point, again, decent. You're going to get a rejection here. This candle here is going to reject these previous highs because these previous highs are obviously resistance levels. So it rejects it. When she breaks through, she's strongly bullish. At no point does she look like she's coming back down on the weeklies. Why don't I count? The current wave is 5 and the end of wave 3. Because of the fib levels, basically. You might be right. So you're basically saying 1, 2, 3, 4, and this is number 5. Just because of the fib levels. I couldn't get it. Where's your target level going to be then? Up here, 113.40. Yeah, it's also at It's not just at 38.2. This is 3.4. What happens most of the time in Elliott wave is that the ABC correction will meet 3.4. Like I said, I'm not mad about Elliott waves. I prefer fib levels. Okay. It's not 38.2 of this move. It's 38.2 of the whole move. You've got to remember it's a commodity pair as well, and commodity pairs don't have a tendency to keep to the rules too much with regards to Elliott wave. And if you remember Oshawa, at the beginning I said I'm not really giving too much emphasis on Elliott wave, especially on a weekly chart. What I'm looking for a weekly chart, I'm looking for price action off the candles, okay, engulfing greens, etc., to give me bias to the upside. Another engulfing green here, okay. At no point do you want to be looking for shorts. Okay, daily chart. Okay, this is why. And another thing with if you are looking for fibs on commodity pairs, they have a tendency, commodity pairs, to extend to 423.6. So 423.6 is 101.07. Okay, you can take different fib levels off here. This will be 261.8%. Obviously, like I said, this is 101.07. You take this fib level off here, then 261.8% is 101.36. So you've got a decent sort of target range up here. Okay, like I said, the bias is to the upside. At no point should you be looking to get short. This is a prime example of letting candles close. Okay, trying to break through. If you're trying to break through, stand aside and wait till that daily candle closes. You can't predict. At 2 o'clock in the afternoon, you cannot predict where that candle is going to close until you get to midnight and she's finished. Okay. Here will be interesting what sort of candle we get. If we get a doji off 10,000, I'm then looking to get a buy-in around this sort of level, around 9,800. Yes. New Zealand dollar to a certain extent, but not as much. Aussie dollar, Canadian dollar, and New Zealand dollar. So if we get a rejection here, I'm still not looking for shorts. I'm only looking for shorts if I get underneath here. Okay, so I'm still looking for longs, and I'll just look to my shorter time frames for them to tell me whether or not I should be getting long or not. Here, we're not closing underneath the support level yet. Okay, this okay, after the upside. Okay, no, if you break the upside, active. I've put it at level to take it, and I opened it at the 7 o'clock open, which is 99.61. Let's have a quick look at sterling yen. Dollar yen is just decent, spiking doji through 81. Okay, so trading that down. 81 was the target this morning. Okay, I actually had 80. It was 81.17 and then 81. So I'm not looking for big moves in dollar yen, and I'm also conscious about Bank of Japan. But again, weeklies, there should be a trend line on here. I don't know what's happened this morning. Seems to be losing some of my weekly trend lines. Okay, there's a trend line on there, which just happens to have lined up with this at 80.85. Okay, it's a relevant trend line. Still showing a bearish bias. If I get a reversal candle today, what am I looking for tomorrow? I'm not. I'm waiting for a trend change. I think dollar yen's nearly cooked, but we'll wait. We wait and see. I can't see the Bank of Japan letting me go much further. Here, okay, impulsive move up, which was intervention. Okay, move down is looking corrective. Looking for a break to the upside, basically. But I want to get above 131, the figure. Okay, here this morning, it's a wedge breakout. Breaks out, comes back to test the breakout line, and then moves higher. Again, you need to get above this level, really above 130 sort of 28 to push it up towards this level. But like I was saying, 131 break is really the key point in sterling yen. Euro yen, I can see a head and shoulders formation, which gives it a bias to break to the upside. So this is what I'm saying about euro. I know I've got a euro bullish bias anyway, and I've got a sterling bullish bias. Okay, I've got to have a yen. Looking at these, they're going to take these pairs. I think it's going to be yen weakness as well, and I am expecting. I'm expecting them to come in and intervene at some point. Here, I'm looking to trade a break this morning. I wanted to see a move out of the neckline. If we do get a move out of the neckline, you're going to get some decent target levels. 11,560 and possibly up to here, 11,631. Okay, it's a nice big formation as well. So you can expect a decent move to the upside. Change currency, dollar Swiss. Dollar Swiss is just, it was sort of hovering here this morning. I was 3 lots short and took one off because I didn't. That candle after there was spiking lower. It kept on rejecting 95. The figure was my first target level, so I lightened the load, and literally as soon as I'd lightened the load, it spiked down and it hit the first signal. 94.31 was the next level that I was looking for. If it breaks above 95.29, obviously out of it again. And we'll stand aside and wait for tomorrow. Weeklies, obviously all-time lows. Can't get any sort of decent fibs on them. At no point does she really look like she's going to pull back. Okay, now we've got a decent spiking candle off the 10,000 level, but she just keeps pushing lower. The weekly candles look fantastic. Again, rejection off the resistance line. It's not rocket science, this one. Euro Swiss is a bit like rocket science, so she's just, you've also got two conflicting indicators in Euro Swiss. What we do have is a fib level down here, okay, 129.39 on these weeklies, and he rejected and moved up. Decent green candle. Okay, now we're up against resistance, 134.22. We're spiking lower on a couple of occasions, so we might break out to the upside. We're basically looking to break this trend, as far as I'm concerned. I'm looking for a break of 133.20 or a push up through 134.56. At the moment, no bias on that pair. If any, sort of very small upward bias, but that'll be it. So just go to see if we can get through them all. That'd be good. 10 minutes. So CAD. Down, down, deeper and down. Weeklies. Okay. Obviously, monster move down. Rejection. A bounce off parity. Obviously, big figures get attracted, as we know, to currency moves. Notice how the second support level holds. As soon as she gets underneath here, she's getting capped. Okay, so she's moving down. I'm not looking at RSI. I'm not looking at MACD to see if she's getting a double bottom with divergence. What I'm looking at, I'm just looking at price action on this weekly chart, and she's just showing lower. Okay. I will put fib levels onto shorter time frames. Here, rejection, move back up towards 50%, 161.50 0.8 didn't really hold for much. What I was intrigued about was the fact that it was around previous price action. Okay, it did pull back, hit the moving average, now move lower. Up against some support here. Obviously, again at 10,000, you're going to see some support break there, and we can get down to 97, 95 quite quickly. You then will be out of this consolidation mode, and we can move it down. We could keep moving. The big picture, not talking about next week. We can move down towards this sort of 9,500 and maybe even lower than that, going back to the lows in 2007. We've done Aussie dollar, euro yen, euro yen. Okay. Monster above support at the moment. What's it done this week? It's moved down and clipped support. Okay, clipped support or 11285. Now, obviously, if you turn it into your daily chart, okay, it's held with the doji. I actually thought that we might push down to this level, so that's why I had my fib on there, and it lined up quite nice for a 50% retracement to 12240. I think you're going to have to move that up to tad, which will now line up with 423.6%, 123.09. Then look back. Is there price action around that level? Put a line on it. It's a fair bit. Okay. So again, it's a good for the pair to get attracted towards. To this higher, I'm looking for bullish signals. In one of my reports, the weekly report that I wrote, I did actually say that I'd prefer to see a move over 11,634 before I get truly bullish on this pair again, because that's 261.8% of this sort of first mini wave that we had down here. And what you might have some tendency to do is just to go up to take that level and then move down before the next push up. Any questions? Any questions at all, guys? Or girls? No? No questions at all? The only reason I'm going to say yes, because it's not on my hit list, is because I've got a pal that's moving back from Australia, and he keeps on asking me where I think it's going to go. This is the squeeze, basically. It's made this new low, bounce through the new low. I think it's going to go back to test 162.19. I'd want to see it break 160 to continue its merry trip down to further levels. I'll put a fib on there actually. Didn't really hold there at all, did it? So at the moment, it's a squeeze as far as I'm concerned. If this holds, and look to the downside, 160, I told my pal to try and get out at. If it breaks 160, then it could keep going further down. Hold on one second. A good question. When Bank of Japan intervenes, the yen is going to weaken. Should have a dollar yen rally, but might not be as aggressive as euro yen and sterling yen. It's a good question. If Bank of Japan buys dollars, won't Fed sell dollars? The Bank of Japan aren't buying dollars. Okay, they're weakening yen. Okay, that's what they want. They want to weaken yen. They don't want to buy dollars. They don't want to hold dollars. They're weakening yen. They're weakening yen against everything, not just against the US dollar. Do UK brokers vary significantly? It depends what you're looking to do. It depends whether you're looking to spread bet or not really. No. I've got my favourites. From low or I don't understand that, Master. Sorry. Fib Q from low or final for extension. If they pump QE in, I mean, I'm looking at stocks. I don't trade them. I look at stock. What I used to look at stocks for was trying to get a bias, okay, for the yen pairs, but that's gone out the window now. So I'm not really stock crazy. If they pump in QE, then it's going to be good for stocks, isn't it? I don't understand what you're saying, Master FX. Okay, any other questions? Because we're going to get thrown off in a second. Not thrown off. It's the wrong way to talk about Vicky. There you go. Okay, guys. Thanks very much, and good luck with your trading. And I hope to speak to you again soon. All right, bye for now.